Alicia, I'll start with you. You recently joined Hines after a very extensive career in agency. Just tell us about what's happening at Hines here in Australia.
Yeah, thanks, Adam. So the Hines business, for those who don't know Hines globally, we're a mega developer. We're probably the third largest private real estate company in the world. And the current portfolio value of assets under management is about 160 billion. So a big machine globally. In terms of Australia and our presence here, Hines has actually been in Australia since 2012. And most of what we've done here in Australia to date has been in the office sector. And we've got a couple of big office projects in Melbourne that are currently underway, and some assets in Brisbane as well. But in terms of the industrial and logistics platform, that's what I'm on board at Hines to establish. And the main reason for that is that we raised capital to seed an unlisted wholesale fund, which is focused on Asia Pacific as the mandate, and is actually a diversified fund across all asset classes, but a pretty big focus on industrial and logistics. So it's public knowledge that fund was seeded with equity from Cadillac Fairview, which is the Ontario Teachers Pension Fund, and there's a roster of other global investors that are coming into that fund as we speak.
Alicia, so what's the remit? What's the investment sort of approach here in Australia? Where are you looking? What are you looking for? How are you identifying value?
Yeah, interesting question. So Hines has an internal proprietary research team, and they allow us to look very granularly at not just historic data, but forecasts across all the markets we operate in around the world. So one of the really interesting things that they've shown us recently is the post-COVID acceleration scenarios across all markets, and Australia is out in front there. So that's part of the reason why now is the time that we're here, apart from the fact that the capital wants to be here right now. But just in terms of where we're looking, I mean, probably no different to other global investors or investors that have got offshore capital coming into their funds. There's a big focus on Eastern Seaboard. But having said that, you know, we're really data driven, and you know, we're looking at sub markets and particular segments of each sub market where we think there's still some runway in terms of price and rental growth.
Yeah, I mean, it was interesting in the previous session, Annabelle McFarlane from JLL was, you know, referencing the asset sort of reallocation from major groups like yourselves and at prioritising Sydney and Melbourne logistics. It's an interesting thing to see it at play. So have you made any acquisitions, Alicia?
Not so far. I mean, I've been on board for just over 3 months. We're in DD on a few assets. So 2 in Melbourne and 1 in Brisbane at the moment. So, you know, it's been an interesting time, because obviously the sector's really hot and it's super competitive. I think, you know, if you look at what has traded, if you look at the transactions over the last 3 quarters and you look at pricing, it's really interesting that, you know, on average, the sale price versus asking price has been sort of positive 5 to 9%. You compare that to retail assets where that delta is more like 0.5%. So clearly, it's a very hot sector and it's super competitive. But we feel like we have found a bit of a niche in terms of not just the size of the asset, but the profile of the investment as well. And as I said, with respect to the proprietary research, like that's really driving a lot of our investment thesis. And so the assets we are looking at, we're looking at markets where we still think there's price and rental growth. And that's not every market in Australia. You know, we haven't seen that strong a rental growth across the board. I think if you look on average from 2006, that's kind of been between 1.7 and 2.6% for rental growth. And so, you know, most markets we're looking at, there's positive signs there for forecast rental growth, and it could be up to 3.5 times that historic trend in some submarkets. I'll pick one, being South Brisbane, for example. And the other thing we look at is price growth as well in terms of the forecast. So not looking back at what pricing has done, but looking at what we think the forecast is going to be moving forward. And similar to rental growth, you know, there's some markets where we see there being, you know, significant outperformance, and others where we see significant underperformance. So Melbourne's West would be one where we think from a price growth perspective, you know, that trend looking forward could be negative. But, you know, it's not an exact science by any means, but, you know, that is the data that's kind of driving our investment in Australia. So very granular.